Hi, I am Nitin Seshadri. Over the course of the next few videos on this channel, I will be talking about various aspects relating to what I do in the stock market, which is principally selling options. I will explain how to be a good option trader, what strategies I use, what strategies I think you should avoid using, and I will spend some time in this video first of all setting the context or talking about why you should be in option trading or option selling in the first place. I want to first talk about four different numbers, right? Or four sets of numbers. The first number I want to talk about is the number 72. The number 72 you will be familiar with. It comes from the rule of 72, which says that money doubles in the number of years, which is 72 divided by the compounded annual growth rate. So let's say your money earns at, let's say, 18%, then your money would double in 72 divided by 18, which comes out to 4 years, right? So this is the first number that I want to talk to you about. Second number that I want you to all remember is the numbers which are powers of 2. 2 squared is 4, 2 cube is 8, 2 to the power of 4, 16, 2 to the power of 5, 32, and so on. You may ask why I'm asking you to remember something which you have learned in your high school mathematics classes. The answer is all too many of us forget these numbers. I'd like you to just keep that number in your head because I'm going to keep referring to that at some point in time in the future. The third number is the number 16. The number 16 is the long run compounded annual growth rate of a well balanced stock portfolio in the Indian market over some decent medium to long term time frame. There will be many years in which you get higher returns than this. There are a few years where you get much lower returns, maybe a year or two where you may even get negative returns. It doesn't matter. But on the long run, I would expect this to be somewhere in the region of around 16% as a CAGR. The fourth number I want to talk to you about is the number 12. And what the number 12 is, the expected number that I think anybody with some barely good, a fairly good option trading strategy and option selling strategy should be able to make. And this number that I'm referring to is a post-tax number. Post-tax generating 12% of your total portfolio value. So keep that number also in mind, 12. Now let's start looking at what impact your wealth will receive based on multiple different strategies. Let's take a time period of 27 years as an example. Why am I taking the number 27? Because it lends itself to rather easy math with some of the scenarios that I'm talking about. First, let's start looking at a scenario where somebody has a well-balanced stock portfolio invested today. 27 years from now, let's take a simplified case, by the way, where the person is not investing any amount of money in between in those 27 years. Let's assume you start with an amount of 1 lakh now. What will be that amount after 27 years? Right? Let's take scenario A, where you're growing at 16%, the compounded annual growth rate of the stock market. When you look at 28, you look at 72 and you divide that number divided by 16, you get a figure somewhere around 4.5. That's the number of years it takes for capital to double. All right. Let's take scenario 2. Let's take scenario 2 where you earn not only that 16% from the well-balanced stock portfolio, you earn an additional 12% post-tax. And later I will explain how it's actually 16 plus 12, and it's not a choice of whether you get that 16 or you get the 12, right? So if you look at the number 28, then you would, in effect, what happens here is, if you apply the rule of 72, the number is approximately 3. Actually, it's a bit less than that. 72 divided by 28 is a number quite a bit less than 3. Actually, at that end of the spectrum, the rule of 72 doesn't work really well. But be assured it's a number less than 3. For the sake of argument, I will take it as 3. Now, let's take a 27-year period and let's take scenario 1. In scenario 1, 27 years divided by 4.5 means 6 doubling cycles or 6 compounding cycles. And 2 to the power of 6 is 64. Park that number in your mind, 64. Let's take scenario 2, where I'm actually growing at 28% CAGR and compounding or doubling money every 3 years. In a 27-year time cycle, I will be able to compound 9 times. 2 to the power of 9, right? So if I take 2 to the power of 9 and that comes to 2 to the power of 6 multiplied by 8. In other words, 64 by 8, this is a number which is almost 500. Okay, it's almost 500. So let's look at what these implications are. You start with an amount of 1 lakh. In scenario A, 27 years, you end up with 64 lakhs. Scenario B, you end up with 5 crores. This is assuming nothing else is invested in those intervening 27 years. And I would hope that after hearing these numbers that you actually don't do that and you actually get into investing your money periodically in the stock market, keep increasing your capital and keep supplementing that increase in capital by actually doing some of the things that I'm going to tell you about in subsequent videos. Now you may counter with the question of there are data that shows that 90% of people trading stocks lose. Trading options lose, trading futures lose, right? And my answer to this is, well, tell me one business in which that isn't true. If you take the data from all entrepreneurship, people who start a small business, people who start a trading business, people who start a manufacturing business, after 10 years, 90% of those businesses are closed because they just didn't generate enough profits. So 90% failure rates exist in every form of business. I'm going to make the argument that what I'm advocating everyone do is actually another form of business. I think if we do this business with a reasonable amount of risk management, a reasonable amount of knowledge, and a reasonable amount of savvy, it should be possible for everybody with a bare amount of discipline and some amount of knowledge to be able to earn at the levels that I was talking about. Right? So this is going to be a journey in which I take you through this. I want to show you what strategies work for me, and more importantly, what strategies will not work. I'm not claiming that the things I do are the only things that work. A lot of people do different things, and different things work for different people. But the things that don't work for anybody. I want to stress that again. The things that do not work will not work for anybody. So keep that in mind, and we'll be looking at subsequent videos. I'll be trying to post one every week. And then in the initial few will be setting the context for what we should be doing and how we should be doing. And then in a few later videos, I'll try to explain a little bit in depth about what kinds of strategies I use and what are the kinds of potential gains and pitfalls in those strategies. So look forward to seeing many of you in following my videos in subsequent videos. Thank you.